Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's the Wednesday edition of Trader Talk in today's market. And I'm your host, Kevin Horner, joining you from Denver, Colorado. Today, as always, on a Wednesday, joined by my friend and fellow Schwab coach, Brent Morris. Good morning, Brent. How are things out there in Utah today?
Hey, things are pretty good here, Kevin. I'm glad to be here.
Looking forward to a brief chat with you all this morning, even more so about the weekend on deck, though. Don't mind another short week here. We today are joined by Barb Armstrong in the chat. So take a minute and say hey to Barb. She'll get to comments, questions Brent and I are unable to, but of course, we'll keep an eye on what's happening there. We do want to hear from you. Remember, you can post for the duration of our show. We'll go about 45 minutes in total here. If you're not already doing so, the three of us are also available to you on X. We try to post there throughout the week. You can track us individually as coaches. Brent Moores, CS, Barb Armstrong, CS, and Kevin Horner, CS. It's a good spot to find us when we're not hosting classes for you here. Also available on LinkedIn as well, and some of my posts will make it there too. So check us out where you have the opportunity. All right, let's get to those disclosures so that we can jump into the news and the charts of the day. So please remember, everything we cover should be considered informational and educational only. We do not make recommendations here. We do not endorse a specific approach to trading. What we will offer is conversation around technical analysis as we evaluate the markets here. Remember, these concepts and strategies we offer are informational, educational, and designed to be kind of insights for you, but whether you choose to use them is entirely at your discretion. Remember not to make decisions exclusively off what you get in the way of technical analysis. Of course, in this class, we take a top-down approach. We try to start with our broadest of indices, work our way through those into various industry groups, sectors on the move, and so forth. We'll also try to get to some stocks in the news as we kind of evaluate what's going on broadly today. So let's start, as we always do here, Brent, with a look at the SPX. Yesterday had a nice candle for us there, Brent, and yet I can't get away from this cannot get away from this visual that has a downtrend line here, Brent. And I'm going to draw this in here. Let me just put this in. So let's see here. Make sure I'm sharing all of my pertinent details, everybody. All right, I think I
Yeah.
figured it out.
Okay.
Screen. There we go. Am I now? Is everybody
Yep.
seeing that now?
You're looking good, Kevin.
Okay, I don't know what
Looking
I did
good.
wrong there. My apologies to everybody. But Brent, talk to us about that. Is that downtrend line valid?
I think so. I mean, we'll see as the day progresses, perhaps. But we kind of like, of course, we're 3 minutes into the market day, but right now we have a little bit of a Harami candle on this, a bearish Harami candle. So what that means is, so first of all, what that is when you have a larger candle. uh, the first, it's a two candle pattern. The first candle is a larger candle, and the second candle is inside the previous candle.
Hmm.
Uh, and we have a green candle first, and then the red candle second. That could be a potential reversal on this. Now, it's a shorter term pattern. All these candle patterns we look at, when we look at a single candle stick, it's a shorter term signal, but it is a reversal signal. Now, I don't know what it's going to look like at the end of the day, but after you've had that strong momentum up, now we see kind of a reversal in that. You can see that incidentally in the RSI at the bottom of the page. Going up,
Sure.
moves over. That's a momentum. RSI can be used both as a momentum indicator. It can also be used for overbought, oversold conditions, stuff like that. But uh, because we have that downward momentum, a bounce down at a potential resistance level of that line, we'd consider that line to be a little more valid. Now, maybe there's some news that comes out later in the day and we break through stuff, then the line, isn't as significant. But right now, I'd consider it kind of a resistance level.
I think so too. Obviously the we can always fall back on some pretty basic stuff as it relates to technical analysis, can't we? This is at its moment a lower high. And if that lower high persists, well, then we increase the risk of making a lower low. Doesn't mean we're going to. We could certainly make matching lows, and Brent, we could hold up at my zone of support right there. which is that last low was higher than the one prior. So, at least initially we denied an immediate breakdown there. And Barb is pointing out too,
Yeah.
it could be a pennant formation, right? It could be something that takes weeks to play out instead of days. And if that's the case, if I was to show you this on a weekly chart, Brent, suddenly it doesn't look nearly as negative.
No, no,
It's funny
because
how
the
that works.
context matters. The
That's right.
longer term context matters. And in this case, it's just like if you look at it this way, it's like just a little pullback in amidst a broader trend up, which is fine. But yeah, shorter term, it is kind of looking like a pennant pattern because yeah, we have lower highs, but we have higher lows, and so that makes it look a little more optimistic otherwise. And to make it look really optimistic, you're right. You could pull out in time frame. Very often, by the way, when you're looking at these indices, these major indices, and you get down because, oh, things are pulling back or whatever. Hey, look at the broader context because in general, the market has gone up historically. I can't guarantee for the future what it's going to do, but historically, the longer term period that you're looking at the market, the more the odds are it's gone up. And to the point that, like, on any 1 day period, it's a coin flip almost to whether the market goes up or down. But the longer you look out, uh, it's more likely to go up, which is why the stock market is such a wealth generating device for people to be in. I can't recommend you to be in any individual stock or what your asset allocation or when you should be in the market or whatever. But what I'd say is for the long term, the stock market has been a huge wealth generating device for people because over time, the stock market, in particular, we're looking at the S&P 500, has gone up historically.
Yeah, it's hard to remember some days, Brent, that's the case.
Yeah.
But the day to day, as much as we are here, you all know we're here 4 days a week talking about this stuff in Trader Talk, and yet some days it feels like maybe there's too much noise to be
Yep.
validating price movement necessarily. The longer those trends are evident, the more strong and reliable they come just in by nature. So that's one of the positives of technical analysis is the longer viewpoints can offer you longer term trends. They can give you reasons to stay with those trends for extended periods. And be perfectly honest, I find that by watching the market on a day-to-day basis, I get a little anxious sometimes, and I'm
Yeah,
sure
sure.
that's not. I'm sure I'm not alone in that
No,
way.
no.
But that anxiety can lead us to making poor decisions in lieu of falling back on what we know to be most valid, most consistent, easiest to track. And so sometimes pulling that viewpoint back, Brent, from the daily to the weekly can be kind of helpful as a reminder. Brent, I wanted to ask I'm going to kick us over to the NDX, but I just wanted your kind of general thoughts on overall. The month of June was kind of choppy for both, right? I mean, if I
Yes.
clear all this out, you're going to see that the NDX has had a great run, but look at what's gone on really since mid-May. I mean, it's been up, it's been down, it's backfilled more or less, and basically sideways. Price hasn't gone anywhere, whether we're talking SPX or NDX. Is this just maybe attributable to end of quarter, end of month? What do you think?
I think whenever you're looking at what the market's doing, the context matters. And part of the context is just how much we had run up before we've got to this sideways move. So
Hmm.
if we did continue up, all we'd be hearing about right now is market valuations, market frothiness, and whatnot.
Yep.
So I think when you consider just the amount that it moved up, especially given the fact that a lot of that occurred when there was like a lot of uncertainty in the Gulf, and then it is kind of weird because when we start to see maybe more of a resolution, and the news is off again, on again, whatever on that, but that's when the market stopped going up. But I do think the context matters of just how much it's gone up, And so a little breather is kind of just how I'm viewing that right now, to be honest, Kevin.
Well, I'll take that, Brent, because in reality, breathers are what give us opportunities for continuation. You're
Yeah.
right. Let's put some numbers to this because the market did great in the first half. First 6 months of 2026, the Dow was up nearly 9%. That's the best first half performance in 5 years. In the same window, the benchmark S&P was up 9.5%, 9.6 actually, and the Nasdaq was up almost 20 at 19.9. The Russell 21.9. So we had incredible returns in the first half. So good, Brent. That was the best first half performance broadly since 1991.
Wow.
We had geopolitical concerns. We had oil prices spiking over $100 a share. Now they've
Yep.
obviously come back. And yet the market continued to do what it does, which is carry that inherent bullish bias forward. As it relates to a good question from Barry in the chat, what are the major forces driving it up? Increased corporate profits or increased people getting into markets? I think it's a fantastic question. I'm going to hear your opinion on it, Brent. But the first thing I'm going to say is, Brent, the key to this market seems to be an absolute denial of the bullishness.
The the those are interesting numbers. I posted on this out yesterday on X on the outperformance of the SPX. In fact, largest outperformance of the SPX since I think it was 2002, if my memory is serving me on that. And but all the indexes that you just mentioned are doing great. Corporate profits were great, and so I mean, very good question. I think they're related
Yeah.
in a way, in that the reason why investors are willing to put money in the market is that the earnings have been going up. And so that's a great thing because
Hmm.
the market can support higher valuations. The E and the PE ratio, as that goes up, the P can go up too and not get too overbought. But yeah, so we had a great first, excuse me, 2Q earnings season, and we're about to kick off Q3 here in a couple weeks.
We will. Obviously, more data is helpful to us. The other thing that's kind of left markets under some chop here, if you will, I think, has been the conversation around interest rates. Of course, Mr. Warsh coming in as the Fed chair has been a little bit more hawkish than maybe everyone expected initially. He's speaking as we speak right now, and there's going to be some headlines from that. Obviously, the conversation around employment, jobs, etc. If jobs stay strong and healthy, so to speak, you're going to see continued conversation around the potential for rate hikes rather than rate cuts. The Fed Watch is still validating the concept of hikes between now and the end of the year. We are, of course, residing at 350 to 375 basis points, and the leaders in the clubhouse are for at least one, if not two, rate hikes between now and the end of the year. That's how traders are positioning for it, at least. Doesn't mean it's going to happen. In fact, you know what, Brent? I'm inclined to think that the traders don't know what's going to happen because the reality is we, as the way that we've been positioning largely as it relates to rates has been wrong for like 3 years. No matter what the expectation's been,
Yes.
it's gone the other way. We expect cuts, hadn't gotten as many cuts as everybody wanted. Expect rate hikes, haven't seen rate hikes. So, it's just been difficult to really read the tea leaves. And I think traders are maybe a little bit uncertain. Regardless of where they're putting their money, the reality is they've not been right about it much.
Yeah.
And Brent, and the other thing is, Russell's denying everything as it relates to the potential for hikes. If the Russell traders really believed that rate hikes were coming, would the Russell be trading at all-time highs?
It's a surprising move in the Russell. We've mentioned that before,
Hmm.
and I think it's broader optimism in the market. But yeah, I think it is certainly not expecting a significant headwind from higher rates there, even though, hey, this morning the headline is, I haven't, obviously he's talking right now, I think.
Hmm.
Chairman Warsh is talking, but the headline is he's declining to discuss, rate hikes, whether, the next interest rate decision here, which goes right along with what he has mentioned, and that is he's not going to communicate as much and speculate as much, I guess is the way to say it, as to what is the future path is going to be. So yeah, there's kind of this disconnect between what the Fed funds futures are saying about what interest rates are going to do and what the Russell is doing. One other thing is um, the question from Barbara in the chat, Barbara Hicks in the chat, what's driving the higher earnings? One of the big things driving higher earnings is all this expenditure
Hmm.
on like AI related type expenditure, chip type expenditure, or a lot of that because IT is such a huge part of the economy. A lot of companies are spending a lot of money in the tech space, which is driving up. We've seen semiconductors. I saw a stat. What was that? It's the largest gain in the SOX index ever. Was it ever? I think uh, during the last quarter or first half of the year, um, and that's the kind of stuff that is driving. I guess it was probably last quarter, but that's driving
Well,
earnings too.
yeah, 50% of the year it was, and we're down 4%, 3.5% today, and its year-to-date change is 94. So 94% in the first half. That's in the semis specifically, an incredible run, and it was 100% pretty close at one point here, right? I mean,
Yeah.
obviously we were here about 10 days ago, we were probably, well over 100% on a year-to-date return. So not really a surprise given the spend, as you called out, Brent. I mean,
Yep.
the spending has been enormous. And I guess the question, of course, becomes when does the spending get reined in? And is that the catalyst for things slowing down eventually?
Yeah. I mean, I think that's the question. I don't have an
Yeah.
answer for that, but that is the question. Yes.
That is the question. I agree. And of course, at some point, the other thing that analysts are going to be wondering about is the spend giving the revenue bump that is expected? You're going to spend that money. That's step one. Step two is can the spend that we've put out, all of that CapEx spending, does it lead to revenue boost? Does it lead to more dollars incoming? And of course, when we're in the build out phase, the answer to that for a lot of the companies that are structurally required to build out this plan, very broad, worldwide plan, of course. That initially is going to benefit all of those people, but the question then becomes at some point, does that change, right? This happened again, Brent. This is what happened essentially when we had the build out of the internet in the late
Yes.
90s, early 2000s, right?
Yeah, absolutely. So, there's a lot that we don't know about the future. How much can uh, we turn the new technology, the spend into corporate earnings? Of course, it's great for corporate earnings right now on semiconductor manufacturers, for example, but
Sure.
for the companies that are spending billions and billions and billions of dollars on this, it hasn't turned to corporate profits yet for a lot of them, but we'll see. We'll see what goes forward, and there's just a lot of uncertainty on that right now.
Yeah, you said it. Uncertainty feels like the proper term here. I'll tell you when I'm looking at the trend here, it does look a little more choppy. We've obviously had a little more volatility,
Yeah.
bouncing off the 20, making new highs, violating the 20 to the downside with some lengthy tails, and then recapturing. So there, I mean, that's a pretty low tail right there, as is this one, got right back above the 20. So the 20's been, kind of important for the semis. I'm looking at a horizontal support line down here, somewhere in this vicinity, that kind of stands out as an area for potential support if the SOX doesn't hold the 20 days. So let's watch the 20 for a close here initially for the, today moving forward. One of the areas that, of course, has been doing much better has been transports kind of leading. Now, broadly, they've really settled down, but it's been airlines moving on a really nice improvement with oil, of course. And airlines have been, boy, my bull flag play out here could not have played any more appropriately.
Yeah.
The math on this really mathed well. We had a bull flag break to the upside, a throwback to support, and then another breakout. And the measured move calculation took us basically into a new bull flag that's being priced in right as we speak. Now this is largely, like I said, Brent, tied to the movement in oil as I see it. Do you agree? Is that almost exclusively what's led to this jump, do you think?
Yeah, yes, I think so because well, oil, yeah, oil and just the idea that there's more likely going to be more travel, yeah, because of oil.
Hmm.
Obviously, crude oil ultimately one of the things that translates to is jet oil prices, and that's what we're seeing. So, um, and don't just a little caveat, just because your measured move works out perfectly sometimes when we look at like this. It doesn't always work out that way.
Yep.
But in this case, it worked out very nicely, and that is a bullish pattern, obviously.
So, gang, I want to show you all something real quick just because we're here. If you've gone through the process of drawing in these types of lines and highlighting certain price levels and what have you, and you're thinking, gosh, I'd be great to see this, but a little more clearly, but I don't want to give up all the drawing I've already done. Well, I want to show you just a quick tip because not everybody is aware that you can set drawing sets here. So this is defaulted to default, go figure. But if I wanted to keep the drawing that I've got on here, I'm just going to make this really easy. Let's call this daily. And now if I go back to my drawing, I can go to default and I can delete everything that I have on the screen, but my daily is still there for me. So I have just created a separate draw set that will allow me to refer back to what I wanted to see, but also clean up my chart rather quickly. So I frequently will create various drawing sets. That's one of the ways that I post on X, for example. So I've got, daily drawing sets and weekly and sometimes hourly. But just as a quick little tip there, if you're looking to save your draws, but without having to replace them, if you want them back in there, save some individual draw sets. It'll kind of expedite your process quite a bit. Okay, Brent, since we talked about oil, let's go ahead and talk. Let's look at it. We're going to use the future symbol here, CL, for crude light. Now, this is not a futures advocacy in any way. Make sure you're approved to trade futures if you're interested. You got to go through some requisite steps to do that. But we're not, like I say, not advocating for futures trading. What we are advocating for is lower oil, Brent. That's a positive for us, broadly speaking.
That
It's a disinflationary pressure. And what's interesting to me, Brent, is that there has not been a bounce here. I expected a break of the 200
yeah.
day to at least bring a relief bounce of some sort, but we haven't seen it. So the expectation might be for oil to remain in this vicinity. This is a wonderful time frame for this to be playing out as we hit the summer.
Yeah, absolutely, absolutely. Summer, going back to the airlines, summer travel season and whatnot. Nicer to have lower oil. We're almost down to pre-war levels on oil.
Yeah,
So that is, which is kind of surprising given the on again, off again news coming out of the Gulf. And we had something just this past weekend where the question of the strait, whether it was going to close again or whatnot, and so I don't know, but obviously this affects the whole inflation narrative, which in fact affects everything in the economy, and so that's a good thing. It also probably takes a little pressure off the Fed as well, going back to
sure.
the interest rate discussion, because if you have if your foot's on the gas, so to speak, and in terms of oil prices, that's inflationary, and the Fed probably needs to be more aggressive in terms of, say, rate hikes
Hmm.
than they otherwise would be if than they are now then with oil going to a lower price therefore.
Hmm.
So
I'm just shocked to just by probably the full, I mean, the complete round trip. I mean, that's essentially what we've seen.
yeah.
A complete and total round trip from, mid 60s all the way up to 110 plus 115, and then back down to 69 where we reside at the moment. And I'm not going to complain about that. Wanted to answer the question in here for you, Trade and Grow. Yeah, the drawing set that you save, that is individual stock specific. It's index specific. It is symbol specific. So if you save a draw set for a given symbol, for example, if you did it on the index of the SPX versus its ETF counterpart, for example, that's going to be separate as far as this is concerned. So it's all symbol specific. So any drawing details that you apply, text notes, which I use to define the symbol itself, when I'm posting on X, any drawing details, numbers you put on there, all of that is what gets saved with your draw set. So very helpful, especially if you're an educator. For us, it's extremely helpful, of course, but it can save you all a lot of time as well. Brent, the other thing we should look at is not quite as aggressively to the downside. Unfortunately, it's the gasoline
Yeah.
futures here. So we'll stick with the slash RB. Same disclosures apply. But you'll notice we're sitting at a zone of support. It seems like producers are more than happy to keep or gasoline prices at least a little bit elevated.
Yeah, that's kind of how it always is. It tends to ramp up very quickly, but go down very slowly in relationship to that oil.
Yep.
And, something that Bill said in the chat is if you look at the futures, we don't need to go there right now, Kevin, but if you look at the
Sure.
futures of oil, crude oil, we're almost at parity right now in terms of the futures prices, the ones dated out into the future versus now. So that does show more stability in what the expectation of oil prices is. But hopefully, the longer oil prices stay lower, the 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 more uh, gas prices will come into alignment and go all the way down to pre-war levels themselves, which clearly we're not at here on this. And yeah, I mean, this definitely has a ways to go. There's still a lingering uncertainty, and the gasoline prices are really pricing in more, just say, uncertainty and a risk premium, so to speak, than just crude oil prices.
Yeah, I think it also might be tied to the time frame, right? The refining time frame, because
Yes.
now we've
Yep.
had a little bit of a disruption, to say the least, for a 3 4 month window, and I'm sure some of that refinement just was either offline or insufficient for what's truly necessary, and so we could still
Yep.
be looking at a delay, if you will, that needs to play out over a longer window of time as compared to that what we normally see with oil specifically,
That
which
is
is
true.
very more short term.
Yep, absolutely. And if we bring up the slash HO, the heating oil, which is often we'll use as kind of a proxy for like jet fuel, same situation
There
in
you go.
here. We still have a little ways to go down on that to get to pre-war levels on that. So, you have all these different components that come out of crude oil. Some are easier to refine than others, but the trajectory is down on all of them, just bet more so on some than others, I guess.
Yeah, that's true. Okay, Brent. So on an intraday basis, what we're seeing, we've had a little bit of a bounce here, at least. We've taken the Russell to positive, which is nice to see. We've got the Nasdaq off less than it once was, so we're down less than 1%, and the SPX here down about only a third of a percent. Let's go to these hour or intra-period charts real quick and just evaluate real briefly where we might be getting why we might be getting the bounce. And generally speaking, Brent, what goes down initially will bounce back initially, right? As traders try to cover and whatnot. But my question is whether this is actually a bounce that we can believe in. So I want to give traders something to eyeball here. And it sure looks like the true pivot on the SPX is going to be important for short term today.
Well, yes, intraday. So there's a disconnect between what can happen intraday and broader term, but we'll see where we end up. Market opened way, down, way down. It's not a massive lower, but market opened down, and we've been going up since. The
Hmm.
pivot point, that's the purplish line, pinkish purplish line there, and that's your potential resistance there. It coincides, by the way, to your very short-term moving average, which
Yep.
is a 20 period moving average times 5 minutes, I guess. Um, and the high, well, uh, the opening price of the day, essentially, after the gap, after the gap down, all kind of converging there together as where your pivot point is. That's a significant resistance level. Intraday, we'll see if we break below that or if that poses some resistance. Right now, it's coming up though.
Yep. And the reminder for you traders who maybe are looking at things like these pivot points that we have applied on the SPX here is what they can validate for us. Remember, in this case, we gapped below, right? We traded at the open below S1 and then used that as an initial short-term support. But that pivot that resides above us now as short-term resistance, coincident with that 20 period EMA, which by the way, look at how wonderful it was beginning Monday morning, Brent. We got above the 20 period exponential moving average and we held it all the way basically until the final hour yesterday. And then we got a breakdown this morning. So the question is, can we get back above it and back into short term trend? Right now, it is perhaps more likely that we run into the pivot, run into the 20-day exponential as potential resistance. Remember, for 2 days, that 20 period EMA was supportive. We're now below it. And the first thing we got to do for it to be support again is to get back up above it. Therefore, the view is initially resistance. So let's see if we can get back above it. Clearly, 74.80, 74.83, a very important short-term level on the SPX. And the same can probably be said about the NDX, except Brent, the bounce isn't quite as pronounced here in the NASDAQ.
No, it's not. We've still been going up, but the pivot point still holds. It's still there, coincident with the moving average as well. So,
Hmm.
we'll see. We have gone above anything today of today's pricing, though, unlike the SPX, where we still we had that basically opening price that we were below. This we're into, this is the highest point almost. This candle's down a little bit
Yeah.
of the day, but resistance still is in play there on this same situation in that regard.
Yeah, and I think again the takeaway really is just sometimes it's as simple as falling back on your very basic technical analysis tenets of did we make higher highs, did we make higher lows, or anything like that. It can be as simple as that. All right, I wanted to look at a couple of these sectors, Brent. S&P Tech is moving here good today, up 2.3%. But it's not all rosy today, to be honest. I'll put the chart up. It's nice to see, oh, excuse me, not
Yeah,
tech,
that's
communications. Tech is
communications. Yeah.
down, communications is up. The reason that communications is likely up, Brent, I think this is tied to the Meta news this morning, which indicated that they're going to be looking to sell off some of what they deem to be excess compute. And it's been hurting many of those other stocks. So, first of all, I wanted to look at Meta. And look at this move. This is a great move on Meta. 50 plus, up 9% as it's recaptured its 50-day moving average. But Brent, just as importantly, look at what it's doing to the neo cloud companies like Nebius, which is down 13 and a half,
Wow.
or Iren down 5%.
Wow. Yeah.
Or CoreWeave down 11. So it's almost like the big dog is playing in the space and going to be unloading what they expect to be excess compute. That's going to hurt these other companies.
Yeah, is what it appears. And whenever you see a big move in communication sector in general, it's probably either a big move in Alphabet or a big move in Meta, because those are the two big dogs, so to speak. Alphabet more so, but in the sector.
There you
there.
go.
And so here, you see that sticking out like a sore thumb, so to speak. The Meta, uh, the Meta in bright green there, that's the big move. But yeah, that certainly it affects other stocks there uh, that are not showing up in this space here, but it is affecting these other companies.
It's certainly affecting, stocks that traders are watching intently. Trade the I would say actively traded positions. That neo cloud space is very hot. At least it had been, and now you're seeing some significant breakdowns here. I mean, this is a pretty healthy breakdown on CoreWeave, as you can see. I know I'm struggling to see the line there, but
Yeah.
basically, you had support in here, and then now you've broken that down with today's candles, so that's significant. And again, seeing the same thing in Nebius, which was super hot and is down 13.5% back below its 20-day moving average here, where it had been kind of using it as support recently. So, not as we obviously the conversation there is going to continue as the build out continues, of course. But when you get a big player the size of Meta coming to the table like that, it definitely provides a little bit of concern. Brent, any other? I wanted to give you an opportunity from a sector basis. Anything specifically jumping out at you that you wanted to address here before we get to some other stocks in the news today?
Well, I mean, I'd say IT's having a rough day. Often communications and IT kind of are both considered kind of more cyclical. They kind of go hand in hand. Here they're doing total opposite things today. IT's down. It's the biggest loser of the day in terms of the sector performance. Now that's just for today. Things change, but all in all, IT, you can see the chart on that hasn't had a great month. Um, in fact, it's been along with energy, and energy, we all understand why energy's had a bad month. Well, IT has not had a good month, but again, in the context of what it had done the previous 3 months, maybe it's understandable
Yeah.
that we've pulled back a little bit on there, and just I guess the other one that has done quite well, healthcare
Oh yeah.
has over the past month has been a rock star, I guess, in terms of sectors. There you
Yeah.
can see that maybe flagging a little bit right now. Interesting, I forgot about this, but it's kind of right at where our highs were earlier in the year.
Hmm.
So it'll be interesting to see if we can if we could bounce, break above that resistance level. But we've now bounced off of it 3 times at different over different time periods, which gives it I think a little more weight as a resistance level on that. So we'll see on that.
Yeah, I think so as well. One of the areas that today got some upgrades was an industry group. Let's talk about software briefly. Software, most people know, has been a bit of a struggle. It's had a rough go of things. We had a pretty healthy breakdown up here, Brent, from October of last year. If we took a mathematical look at that peak to our trough, what we'll find is a pretty ugly move. How about 35%?
Yeah.
Now we're bouncing, but volatility is clearly the play here, Brent. Look at this. I mean, a big move up, and we basically almost round tripped the whole thing all the way back. So, but the reason I was bringing it up today, we had a few symbols in the software space that have been upgraded. Guggenheim, in particular, upgrading ServiceNow. So let's take a look here. As you can see, this chart, not fantastic by any stretch. It looks a lot like that software chart, doesn't it? Guggenheim upgrading ServiceNow to buy from neutral, a target at 125. The firm sees an attractive opportunity at current share levels. Investors can buy quote, a comfortably profitable, end quote, company that is likely to continue to grow organically at double digits for the foreseeable future at an attractive valuation, according to the analysts at Guggenheim. Brent, like I say, this chart pretty much follows that of the software chart, it looks
Yeah.
like. But what are you making note of here?
I would say this is, although it's not an uptrend. We're, we're still like below all our moving averages. But the downtrend that we had it seems to be changing. There's a different, it's changing from the downtrend that we had. It
Hmm.
seems to have found a bottom there back. I'm not sure exactly what time frame that is there, but a couple months ago here. Uh, I don't, that it could reverse itself, but we have some higher lows since then. Uh, Shot way up and got got rejected, I guess, at the 200 day. But so I think from a technical standpoint, we're just in this period of volatility and uncertainty. Not a clear trend either way, but I'll tell you, not a clear trend either way is a lot better than the downtrend that we were in for a while.
No argument here. I'll take a lack of trend compared to a downtrend any day. And at least Guggenheim is stepping in at a time when the market doesn't agree. And I'm
Yeah.
always a fan of analysts kind of
Oh yeah.
putting their stamp on something before the move, as opposed to waiting for the move and then doing it. So that always
Yes.
annoys me. And most of you are familiar with that. You've heard me say that on a multitude of occasions. The other one that got upgraded at Guggenheim, also in the software space, is Salesforce. Salesforce to buy from neutral at Guggenheim with a target at 228. I like this comment because it incorporates the AI view of it, but it says that their argument is that the so-called fatal bear case on software is the actual hallucination. The firm sees AI as a significant risk and views Salesforce is likely to be negatively impacted by agentic AI. It does believe, however, that the quote Armageddon scenario that is currently priced in to the stock is misaligned with reality, end quote. I thought that was a very notable comment here. Now, CRM, Salesforce, has had a very rough go of things, of course, but
Yeah.
nice commentary again from Guggenheim, if nothing else.
Yeah, nice commentary. So we'll see what happens right now. It's unlike what was that, ServiceNow. This I'm not sure we've seen a bottom on this year. No, I wasn't sure. I'm not sure on the ServiceNow one either, but technically it was stronger than this. This well, I guess first we got to recover the 20-day moving average here,
Sure.
and we'll see which is pretty close to where our lows were over the past couple months. And so we'll see if we can break above that. That'd be a first step of
Yep.
many that are required to really change the technical picture on this stock right now.
Yeah, that's exactly right, Brian. I completely agree that the easiest method here is just to look at the blue 200-day moving average and see the significant distance we have here. What are we looking at, Brent? Almost 50 points from the 200-day moving average. That would be about a 35% rally that the stock would need to make just to get to resistance, at the significant resistance that is. Anybody that's comfortable buying into that is basically counter trend buying here, of course, but that doesn't mean it can't work for you. Um, the I did see a question that I wanted to quickly address here regarding some of these headlines. Now, granted, that's not always going to be available, of course, but one of the things you can consider, everybody, around finding upgrades and downgrades is to use the watch list function. Under lovers and losers, you've got analyst upgrade, analyst downgrade. If you click on upgrade, you can see where we're getting the most significant moves today. And these are the ones that actually received upgrades today. There's CRM, there's Now, and they make it to our list, of course, but I'm going to lean into the ones that are probably the most actively traded, most pertinent for viewers, that kind of stuff. But do check this out. Analyst upgrade under lovers and losers, and then analyst downgrade is also available to you there as well. Okay, let me see. There was one more here. Let's do a quick hit on Dow, which was downgraded. The material space, Brent, has really changed of late. It has not been great. Materials have kind of gone sideways, but the Dow was downgraded at RBC Capital Capital to sector perform. Previously, it outperformed. This is the scary part, though. They adjusted the target from 51 down to 28. That's a pretty significant decline. They're citing the decline in polyethylene prices and a lack of permanent asset closures for this downgrade. Dow is also facing persisting weak demand and significant spending commitment as well. So this is just a heads up on a downgrade. I wanted to point this one out. Any comments here, Brent, on Dow?
That's a rough trend, Kevin.
I
To
know.
state the obvious, it's not even like giving you bare flags along the way. It's just
No.
dropping. So, we'll see. I don't have anything. It's pretty evident on this technically.
Unfortunate but true. Yeah. If there was ever a chart that could give you reasons why we often discuss risk management against your proper trend line, look at that. Beautiful against the 50-day until it broke the 50-day. And then it didn't even use the 50 once as resistance yet. It got speedily moving to the downside. In fact, you could even use the 10-day as a risk management tool on the short side of this. It's just been so aggressively to the downside. So, all right, we are going to wrap it there, everybody. We are actually past time. My apologies, but thanks to all of you for being here, for joining the show, participating in the show. Thanks to Barb in the chat. Remember to follow us on X. If you liked our discussion, you can hit that thumbs up button for us. We do get these archived and available to you here shortly thereafter. So your thumbs up helps us out quite a bit on the replay. Make sure you're subscribed to the channel, everybody. We do have more to come from you here, later, coming up here at what'll be 11 a.m. Eastern. We've got James Boyd with growth and value stocks. So I hope you all have a fantastic rest of your Wednesday morning. We look forward to catching up with you again real soon.